What's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. So in this video, we're going to be going over part 2 of the order block confluence. I'm basically giving you guys 3 different confluences in a 3-part video series. What I use in order to really solidify which order block I need to be paying attention to. All right. So this is probably half the battle as it relates to order block trading. Figuring out which order block is the proper order block to use, which one makes the most logical sense, and there's certain logic pieces that I use in that process. So the first piece we already went over in a previous video. If you haven't checked that out, I'll have it pop up on the screen now. Part 1, break of structure. All right, so I go over 3 different types of break of structure, which one I like to use, and why I need to see a break of structure in order to solidify a previous order block. All right, so if you haven't seen that video, feel free to go check that out and then come back to this one. All right, so now we're going to be talking about efficient versus inefficient price. So efficient versus inefficient price is going to be found using your wicks. Okay, price has to be 50% buyers, 50% sellers always. If there are times where it's not 50% buyers and 50% sellers, then it means that price is inefficient, which means that price is not balanced, which means that price has to come back and balance itself out one way or another. Okay? So what I mean by that is, if we're looking at the highs and lows of these wicks within this area, right? Like, let's just look at the highs and lows of the wicks, and then let's allow that to be all that we pay attention to. So we see we have a low wick right here. Okay? Then price trades through it. Then we have our high wick right here. All right, next candle, we have our low wick right here, price trades through it. Then we have our high wick right here. Now, do you guys see how right here, price comes back up to trade inside of this wick right here? You guys see that? Okay, that tells me that this bearish candlestick right here is balanced, it's efficient, right? Because the last point that we have sellers before the liquidity void, okay, buyers come right back up to touch that. So that means it's an efficient amount of buyers and sellers within this area. Now, if we look at the next one, let's use this low, okay, and then this high. So do you guys see how there's space in between this area right here? Let me grab this. Okay, so this space right here, where the buyers do not come back up to mitigate the sellers, this space right here is pure sellers. All right, there's only selling action going on within this area, which means price is inefficient, which means that price has to come back and mitigate this area. Okay, so do you guys see how, even though this is a mock-up example, this is exactly what happens in the marketplace. Now on part 1, I back-tested breaks of structure with you all. I want you all to back-test efficient versus inefficient pricing on your charts, and let me know if you guys have any questions. All right, and then also, if you want to be able to see inefficient and efficient pricing day in and day out, feel free to click the link, the first link in the bio, and join my Telegram channel, where I send multiple examples every single day of trades that, basically my recommendations, trades that I'm hopping in, and more than likely you're going to see inefficient pricing within the charts that I send. Like, it's going to be there. All right, so you guys can use that not only as a way to make money, but as a study example as well, because the more times you see the same thing take place over and over, the better at it you become. All right, so you guys see how price trades right back into this area and then pushes to the downside. Now, this right here, like this example that I'm showing you guys, even though it's a mock-up, it was based on a live example, right? So this entire thing right here was based on a live example. And then I just decided to draw it out in concept so I can really break down and explain to you guys in detail all these little areas. So price creates a lower low, pushes back up to create efficiency within this area. So buyers come back in, and now there's 50% buyers, 50% sellers within that area. Then we see price push down right here, So let's find any inefficiency. Actually, let's look at the inefficiency within this area. All right, just to go over buyer's inefficiency. So we see we have this wick right here. All right, price trades through. So we need sellers to come back and mitigate this area, and we see that price continues to close higher, which means that within this area right here, we have pure buyers until the sellers come back into the market, right? So it was inefficient, and then we see that price came back to close this area, mitigate this area to make it efficient, right? So that's exactly how inefficient and efficient prices work, okay? So we came back to mitigate this area, perfect. Now let's look at this right here, okay? So we see the last area for buyers come into the market was right here, okay? Because sellers pushed all the way down, then buyers came into the market to push up. We see sellers traded through, all right? And then buyers came right back to mitigate this area right here. So this is efficient pricing, perfect. So we see right here, we have inefficient pricing right here within this area. All right, and then price comes back to create efficiency with this push, perfect. And once you guys actually study, you're going to see that this takes place quite often within the marketplace. And I just use it as confluence. So I'm about to explain to you guys how I use it as confluence after we're done going over all the examples of inefficiency within this area. Right here, we see inefficiency with price, from this wick right here to this right here, okay? From this area right here, this is efficient. Price then pushes up, pushes back down. This right here, efficient. All right, efficient pricing. Then we have this area right here, inefficient. And we have this area right here, also inefficient. So now that we have these areas that are marked up that show us inefficiency, now let's talk about exactly what we anticipate price to do based on the fact that we have an order block right here, we have inefficiency in price, okay? And we have one more confluence within this area that I'll get into in part 3.
What's going on, traders? This is your chance to unlock endless possibilities with our unbeatable trading program. Priced at only $53, this deal is just too good to pass up. Come get access to a wide range of features and benefits that will take your trading to the next level. Whether you're looking to improve your profitability, streamline your income, or simply invest your own money, our unbeatable trading program has got you covered. Don't miss out on this incredible opportunity. Sign up today.
So right here, our original order block was right here within this area, okay? I might actually do a video on how I refine order blocks. I'm debating whether or not I should just keep it within my course or if I should actually teach it to you guys on YouTube. If you guys want to see that, be sure to leave a thumbs up on this video. Once we hit a certain amount of likes on this video, then I might come back and do a refinement video to show you guys how I refine order blocks. So I do it in a very specific manner. So based on how I refine order blocks, okay, I went from using this order block right here to this one right here, okay, with a set of rules. All right, so this would be my order block. We see that this is a great order block because we have a break of structure right here with this body, say BOS, in the center. Okay, with this body closure below this wick right over here. Okay, so we have one confluence, break of structure. We have inefficiency in price. Okay, and we've also refined our order block right here. So what we'll be expecting price to do is once it creates its solid, valid lower low, okay, we'll be looking for price to not only create efficiency within the market within these areas, okay, but we'll also be looking for price to return to this order block right up here. All right, so that's what we'll be looking for price to do, which is why we'll be able to take a trade. So let's go through this as if we were live within the market. All right, so price would make its way to the upside, creating efficiency within the market. Let's send this to the back. All right, we'd be expecting price to tap our order block. Like so. There we go. Let's send that to the back once again. Okay, and then after that, we'd be looking for price to reject the order block like so, push to the downside, and then give us another break of structure. Okay, so we'd be looking for something like this to take place right here. Let's say we have, okay, so we have an order block right here. Okay, let's say we had some type of inefficiency within the market. So we have this wick like so. And this wick right here that did not come back to fill in this gap. So we would have inefficient price. So we'd be looking for price to make its way, whenever it creates its low, make its way back to the upside, mitigate this area as well as filling in our imbalance, and then start to break its way back to the downside to break structure again, right? So that is the psychology, that is the entire breakdown of how I look at inefficient pricing. Someone asked me to do a video about it on this topic right here. So I hope that definitely clears up your question on efficient versus inefficient markets. All right, so this is going to be part 2 to the 3-part series, and I will release part 3 probably sometime toward the end of the week for you guys. All right, if you guys do have any questions, feel free to contact me. Drop a comment down below. Okay, I want to know how long you've been trading and what type of content you want to see me produce. If you guys have any questions, what type of videos you guys want to see me drop for you all, what type of questions do you all want me to answer for you, what type of information are you looking for as it relates to institutional trading, order block trading, anything like that. All right. With that being said, I love you guys. Thank you for all the support. Thank you for all the love. Make sure you click that first link in the description to join Trillionaire Mac Trades. Okay, I want you guys to take advantage of my trade setups. I've been doing this for a very, very long time, and it only makes sense that you guys make money right along with me. We have had 5 or 6 individuals already pass the FTMO funding challenge. So if you are a funded trader, or if you're a trader that wants to be funded by FTMO or another prop firm, okay, then feel free to take my trades, risking 0.5%, 1% of the prop firm money, and you'll see that you will pass the trade and the, what do you call it? I guess you call it exam. Whatever it is, you will pass it with flying colors, okay? I think you need like 10% gain without dropping below 5% or something like that. But we've had 5 individuals already that have joined Trillionaire Mac Trades past the FTMO challenge. So, you know, that's always good. That's really good. So click that first link in the description. Come trade with me. Come see my setups. And most of all, make money. All right, take my recommendations. With that being said, I love you guys. I'll catch you guys on the next video. If you guys do have any questions, feel free to contact me on Telegram, on YouTube, or on Instagram. All the links are down in the description below. And if you need a rule-based system to where you don't have to think, okay, it's going to be binary, either 1, 0, yes, no, true, false. If you need that system, check out the Forex Fast Track. If you're a beginner, okay, and you want a technique in order to apply to the markets and make money, check out the Forex Fast Track. All right, especially if you're a new trader. All right, with that being said, I'll catch you guys in the next video. Peace out.
What's going on, traders? This is your chance to unlock endless possibilities with our unbeatable trading program. Priced at only $53, this deal is just too good to pass up. Come get access to a wide range of features and benefits that will take your trading to the next level. Whether you're looking to improve your profitability, streamline your income, or simply invest your own money, our unbeatable trading program has got you covered. Don't miss out on this incredible opportunity. Sign up today.